The townhouse and duplex market is in a really interesting position. Sales are up compared to last year, but prices have dipped month over month. So is now the right time to buy and get an amazing deal? Should sellers be really concerned? So let's break down exactly what's happening in Metro Vancouver's townhouse and duplex market. So first of all, let's look at my favorite, the sales and inventory dynamics. So sales volume has dropped month over month. So in January 2025, we saw 321 attached home sales. This is down 13.5% from December's 371 sales. This is a huge change in sales month over month. It is crazy to see that there were more sales in December 2024 than there were in January 2025, especially December being the holiday months. You know, there's a week in December where everyone is just focused on the holidays and family and they're not going out and shopping for homes. January, we typically see a rebound, but this is not the case this month. I wonder if this is the trajectory of how the market's going to pan out for the rest of 2025. I really hope not, because this is a huge drop in sales. But when we look at year over year, so we look at the sales from January 2024, we'll see that they are up 12.6%. So up from 285 sales in January 2024 to 321 sales in January 2025. And there are two ways of looking at this. I mentioned this in my condo market update video, so take a look at that. But we can see this as the market showing steady signs of demand despite the seasonal slowdowns. And also with more sales this January than January last year, we can also look at that as a positive outcome for the year overall, with this year potentially seeing more sales than last year. But we can also look at this as the market continuing to slow down, because there was a 13.5% decrease in sales month over month. If that trajectory continues into February 2025, we may see less than 300 sales for the month, which may not be a good sign for the spring market to come. But the sales are only half the story. Right now, let's look at inventory. So in January 2025, there were 1,739 active listings. This is up 14% from December 2024, which is crazy, where there were 1,527 listings. This huge jump in inventory indicates more buying power for buyers. They have more selection, they can negotiate better prices, and increasing the amount of competition that sellers are seeing. And this is to be expected. I mean, in December is the holiday season. Not a lot of people are trying to list their homes and have buyers come in their home during the Christmas season. And most of those sellers that are holding off are putting their homes up in January. But seeing an increase of 14% month over month in listings and a decrease of 12.6% month over month in sales does indicate a huge change in the market. And usually when we see big changes like this, it's not a good thing. And now let's look at the days on the market. So how long a home is actually sitting on the market before it sells. In January 2025, we were at 44 days, and last month in December, we're at 42 days. So this indicates a cooling in demand, but also home sales are remaining steady. At around 40 to 45 days on market, buyers are taking their time to make a purchase, but they're still making purchases. So now let's look at how the sales and inventory is actually affecting the prices. So there has been a slight decrease in benchmark price. So in January 2025, the benchmark price was $1,106,000. And in December 2024, the benchmark price was $1,115,000. This is down 0.8% month over month. And this decrease in benchmark price is exactly in line with what we're seeing in the change in sales and inventory month over month. As sales decrease and inventory rises, buyers have more selection, they can negotiate harder on price. Sellers are slashing prices to stay competitive, and that's where we see the downward pressure on pricing. So around 1% decrease in price month over month. But when we zoom out and look at the bigger picture, in January 2024, the sales prices are up 2.7% right now, which does show long-term growth and stability despite the recent decline in pricing and sales. So the sales to active listings ratio has dropped. What does this mean? Well, we use the ratio of active listings to the sales to determine whether or not we're in a buyer's market, a seller's market, or a balanced market. So we dropped from 23.6% sales to active ratio in December 2024, which is actually a seller's market, down to 18.5% in January 2025, which is now a balanced market. I personally love seeing a balanced market. This means that neither the seller or the buyer has a significant advantage. Buyers are able to make good decisions. Sellers are able to get fair prices, buyers are able to get fair prices. There are still some deals on the market, and buyers still have a good amount of selection. It can still get subjects on their offers. But when we look at the trajectory of moving from a seller's market to a balanced market in just 1 month, alarm bells start going off in my mind, and this may indicate a slowdown in the market. Where we're moving from a seller's to a balanced market, we could slow down even further and move into a buyer's market, especially if inventory is rising the way it has been and sales have been decreasing the way they have been. So now let's look at price trends in different areas. And this is something that I've seen in the detached market and the condo market, but suburban markets like Langley and Surrey, Maple Ridge, are seeing way more price stability and steady activity. But the areas closer to the city, so let's call it like Burnaby or Richmond, are seeing way slower sales. This may be because of the more affordable pricing that you see in the suburbs relative to what you see closer to downtown in Vancouver. And I'll talk about this more in my recommendations and like what's next in the market. But if you're a buyer, it would be really good to consider a market like Burnaby and Richmond that are seeing way slower sales, because that gap in market value to what you can actually pay may be pretty big and you can get a really good deal in a prime location right now. All right, so what is next for townhomes and duplexes? So first, will prices keep dropping? Well, if inventory keeps rising faster than the sales, we could see further softening in prices in the short term. However, we saw that the year-over-year growth was positive, around 3% or just over 3%, which indicates long-term market resilience. Next, the interest rate sensitivity can dictate demand for the rest of 2025. So townhomes and duplexes remain an attractive option for upsizers that are moving up from a condo, and typically this demographic of buyers are families, young families. And this type of purchaser may wait for interest rate cuts before making a substantial financial decision for their family. But then again, this demographic may be less sensitive to interest rate cuts because they have equity tied up in their condo. And as prices start to drop in the market overall, they can get a better deal on the more expensive product, sell their condo at a small loss, and still net the difference. So a buyer's market or a slower market where prices are depressed is actually a better scenario for people that are upsizing. Whereas if you look at a first-time home buyer or an investor, they will be more sensitive to rates because for investors, it'll affect the bottom line. And for a first-time home buyer, this is their first major purchase, and it will really affect how much they can actually afford and borrow. But if we see rates start to drop, which they are scheduled to for the rest of the year in 2025, we can expect a resurgence in demand for the later half of 2025. But affordability remains a key factor, especially for townhomes and duplexes. With detached home prices over $2 million, townhomes remain a really affordable option and potentially the best option for many buyers that can't get to that price point. The attached home market could see more competition if affordability pressures continue to push buyers away from the single family homes. Okay, so let's wrap up this video with some recommendations and the market outlook. So first of all, for buyers, more listings and slight price declines could make this a really good opportunity to shop around. And with townhomes, there's so many different floor plans and layouts. Right now, you can get a really good look at what's available on the market, all the different types of townhomes. And if you're looking for something specific, this may be a really good time to get that dream home, that dream townhome or duplex. If you're waiting to pull the trigger concerned about the higher mortgage rates and then potentially decreasing in the future, consider purchasing now because you can negotiate a really good deal, so bringing your purchase price lower and then refinance down the road, avoiding the situation where interest rates drop, prices start to go up, buyer demand goes up, and then you have way more competition when you're trying to buy. You may not be able to get that perfect home. And the year just started. We'll see what happens in February and March, but with interest rates scheduled to drop throughout the year, expect more competition in the later half of the year. And then for sellers, if you need to sell soon, then price competitively. Buyers have way more choice now, and an overpriced listing is going to just sit on the market. Presentation and marketing will be really important to make sure your home stands out amongst all the other listings in your neighborhood. So make sure that you're working with a realtor that is investing heavily in marketing. And then again, depending on your situation, it may be beneficial to wait until later in the year, so potentially around spring or summer. With the potential rate cuts on the horizon, this may bring up some more demand, helping you get a better price on your home. And then the market outlook in the short term, more inventory, fewer sales. This shows a balanced market, but prices may start to decline in the short term. But in the long term, if interest rates do drop, this could bring up buyer demand, stabilizing prices later in the year. And then overall, the attached market is no longer in a seller's market, but is a still strong segment compared to condos and detached market due to affordability factors and how beneficial it is right now to upsize into a townhome. And this is the latest and greatest on townhomes and duplexes. If this has helped you, be sure to like, subscribe, comment if you have any questions. I've got a detached and condo market update video, so be sure to check those out, and I'll see you on the next update. Peace.